Now, having seen what all income are chargeable under the head PGBP, let us see how do you compute the income under the head profits and gains of business and profession. Now, I am just reading out this particular portion. Please pay attention here. The profit and loss account or income and expenditure account. So normally, whenever you have any assessee, what will happen is that he would always prepare a profit and loss account under the accounting laws or an income and expenditure account as prepared by an assessee. So whatever account he prepares is adjusted for various allowances, disallowances under the provision of the IT Act. Now what happens is that many a times when you prepare your profit and loss account as per the accounting business, that may or may not be acceptable to the income tax authorities. Let me tell you one simple thing which is coming up very commonly. Let us say the assessee prepared his profit and loss account. He showed a profit of 100 and he said depreciation of 20. He showed profit of 80. Let's say this is not profit, this is income. So this is the profit and loss account which suppose the assessee has prepared. Now what normally happens is that if suppose he has claimed rupees 20 as expenditure for accounting purposes, under the income tax law, depreciation is normally different from what is there under the accounting laws. Depreciation under the Income Tax Act is normally more than what is allowed under accounting rules. So suppose the depreciation was 30. So what I do is that I will take, in order to compute what is the amount of tax payable, I will show my profit as 80, which is this number. Then normally it is not that simple, and how these adjustments work and all is something which we are going to see as we discuss things in more detail. But the idea behind telling you about this was to tell you that there are adjustments which one has to make as per the Income Tax Act. Okay, now the profit and loss account or the income and expenditure account as prepared by an assessee is adjusted for various allowances, disallowances under the provision of the IT Act. One follows the following manner of preparation of taxable profit. So you take the profit as per the profit and loss account prepared by the assessee, which in my example was 100. You add various adjustments which are discussed subsequently. Let's say 20 was the depreciation, less various adjustments which are again discussed separately. Let's say 30. I'm sorry, this number was actually 80. And then you just take a sum of all these three, or depending on what you have done, I have taken a minus number here. So 80 plus 20 minus 30, 70 is your taxable income. Now what are the adjustments and all that we are going to discuss subsequently, and after once we are through with the adjustments, then I will take you through certain practical situations to explain as to how this computation is